Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, October 28th. Like it or not, we will be hearing more from the Federal Reserve this week. What we'll hear is anyone's guess. To be sure, the Fed has been full of surprises of late as it has worked to arrest the financial crisis and to facilitate a smoothly functioning banking system. As part of its effort, the Fed has slashed the Fed funds rate 375 basis points to 1.5% over the span of the last 14 months. And if the market has it right, the Federal Open Market Committee will cut rates again this Wednesday. Current pricing in the Fed funds futures markets indicates it is considered a certainty that the FOMC will cut the Fed funds rate by 50 basis points to 1%. Notably, the chances of a 75 basis point cut have picked up considerably. Current pricing implies a 48% probability of a 75 basis point cut versus no chance just a week ago. The collapse in global equity markets, clear signs of a global slowdown in the economic data, and a litany of companies announcing layoff plans and waning demand have driven the aggressive rate cut expectations. A steep drop in oil and other commodity prices, along with the drop in capacity utilization and increasing slack in the labor force, gives the FOMC plenty of justification to cut rates. Although the Fed doesn't make it a practice to bow to the market's wishes, this is one time where we think it gives the market what it expects, which is a 50 basis point cut. We'd be surprised if the Fed went outside that realm based on the latest available information. Cutting only 25 basis points would be viewed as a wimpy move when the market feels this is a time for concerted action. Cutting 75 basis points, meanwhile, would fall to the alarmist side of things when taking into account the FOMC already agreed to a 50 basis point intermediate rate cut October 8th. The latter point notwithstanding, the market would rather see the Fed do more than less at this juncture, meaning it would likely react more favorably to a 75 basis point cut than a 25 basis point cut. The upside of any move from an economic standpoint is that borrowing rates will head lower again. That's good news for current debt holders with variable rates linked to the prime rate. It's good news for prospective borrowers too, assuming of course that banks show an increased willingness to lend money. I'm Pat O'Hare for Briefing.com. Thanks for listening.